The current or classic market cap of Luna is approximately $600–700 million. Obviously, this varies with the pricing, but it's currently in that ballpark right now. At this point, Terra Luna Classic is trading for about $100 million per 24 hours. And of course, this is going to change as time goes on. For now, let's accept these values as the averages and figure out how long it'll take Luna Classic to burn back into $1 or $10 ranges, and so on. Considering the current burns, we can estimate that we're burning about $1 million in Terra Luna Classic day if we're burning at the current rate of 1.2% per transaction. You have to applaud the collective effort, but if we're lucky, we could lose hundreds or even thousands of dollars. Consider what would happen if these trades resulted in a daily loss of $1 million or more, and we may expect that as well. It's going to be difficult if 1.2% of every transaction gets burned. This will be the subject of our discussion in a moment, but just for fun, how about a lovely, straight line? That's quite unlikely. Terra Luna Classic's outstanding supply would be decreased to zero in about 2 years if the company burns $1 million per day and has a market capitalization of around $600 million. That, my friends, would be amazing. And don't even get me started on the days when volume was overstated to the point of absurdity. What you have to keep in mind is that this is a linear model to say, alright, if we're burning 100 million trillion Classic per day, $100 for the Classic every day, and burning 1.2% of that. You have to keep that in mind. This $600 million market valuation is the result of burning $1 million each day. 600 to 700 days, to be precise. And, of course, the Classic will be smoldering in the fire. Everything has vanished. Now, we'll run into various issues and assumptions that this concept makes, such as the premise that every transaction will result in a loss. Every transaction on the blockchain is now at risk of being destroyed. However, there will be issues if there are exchanges that only allow the trading of Terra and Classic within wallets and the like, and do not implement the 1.2% burn tax. If volume isn't taken into consideration, then something like this is taking place off exchange, or anything along those lines. Although it may complicate things, we now have an idea of how long it could take for things to progress. I want to bring in one more blip or obstacle into the mix here. As the price of Terra Luna Classic climbs, we may see less of it exchanged. Is this what you had in mind? People will be able to trade less Terra in a Classic if we start burning enormous amounts of Terra Luna Classic. Even while price and volume may not always follow a straight line, it is important to keep this in mind when making investment decisions. Another factor to keep in mind is this: those who are no longer interested in Terra Luna Classic may become holders, and those who are no longer interested in this meme coin may fade away. You know, it's bad in a classic kind of way. There's a chance that volume will drop. The effect is amplified by reducing the volume. Absolutely. Terra Luna Classic burns more efficiently. We'll have to wait and see. But, well, how about we just throw these out there? If the Classic's price rises in response to the existing outstanding supply, we could see a 1-cent price point if we begin to consider returning to our former market cap. Simple. We're looking at one set of ceilings for Luna Classic if we burn half of the supply. If we look at previous highs, as is ceilings on what Luna Classic can do. To maintain the same market capitalization, we can use a 2% price point for the duration of the burn and a 50% drop in supply. 90% of the fuel has been consumed in the combustion process, so you're in the second year of the program. You've got a good momentum going, in the range of 10 cents or less. Yes.